the thumb rule. Is that EMI less than 60% of my net cash flow every month? Then you look at the cost. Are they charging you a fixed interest or a floating interest?
This is episode number 4 of MSME Talk with Ragini Bajaj Chaudhary on business loans for MSME. Welcome back to MSME Talk podcast. MSME Talk podcast is for micro, small, medium enterprises, startups and entrepreneurs, in which we discuss with industry experts and experienced entrepreneurs on specific value addition guidance and solve queries to help build long-lasting businesses. Ragini Bajaj Chaudhary is a development finance professional with more than 20 years of experience in microfinance, impact investment. She is investment director at 𝐋𝐨𝐚𝐧𝐬. In this episode, we will discuss about business loans for MSME, how to do self-evaluation for loan, at which stage loan should be taken, what should be the purpose of loan, what are debt options available, how to evaluate debt options, how to get information about lenders, how to select the debt options for your business, critical points in loan which need to be checked, and lot more with Ragini Bajaj Chaudhary. So do stick till the end. And now let me welcome Ragini Bajaj Chaudhary for the episode on business loans for MSME. A very warm welcome, Ragini, to MSME Talk to guide us on business loans for MSMEs.
Thanks, Ripti, for having me over. It's my pleasure and privilege.
Ragini, we would love to hear more about your background and professional journey.
You already spoke about my 20 plus years of experience, and basically most of it has been about dealing with MSMEs and startups, both evaluating them for debt and equity over last few years. And I've also looked at many institutions closely as a part of a rating agency, being part of equity firm. I've also worked in several sectors, including education, and have interacted with over 1,000 plus founding teams.
Awesome, Ragini. Very broad and holistic exposure you have from development institute to credit rating, evaluating debt, equity across sectors for MSMEs and startups. Well, Ragini, let's begin our today's discussion on basics of business loans. Knowing that capital is scarce, especially shortfall of equity makes debt a very important component of capital. So at which stage debt should be taken and for what purposes?
So great question, Tripti. I think debt is not for everybody. Debt is for mature enterprises, at least having 2 to 3 years of vintage. It is for enterprises who have revenues. It is with founders who have a good credit score, who don't have any, outstanding against them which they've not paid, or, any red mark in terms of their credit scoring. So I think one is this, these are some of the criterias when you test yourself. Another important thing is the purpose for which you are borrowing. If you're borrowing for, let's say, working capital, asset financing, what is the purpose in your business which requires funding? So if it is, let's say, research and development, building a new product, going into a new market, untested waters, you are still pre-revenue, then debt is not the right funding source for it. Just to give you an analogy, it will be like borrowing from your kirana shop for building a house. So a purpose of debt is very critical.
Ragini, as you mentioned, we should look at debt options only once we have started earning revenue. So what process entrepreneurs should follow if already reached that milestone? To begin with, what factors entrepreneurs should have clarity on before starting evaluation of debt options? Meaning how to evaluate self for readiness of debt.
Correct. So I think before you start evaluating debt options, you have to evaluate yourself, right? So whether one is, okay, have you been in this business for more than 3 years? Have you had revenues for at least last 12 months? Are you generating positive cash flows from the business? Do you have at least positive gross margins? The unit economics, and which is very critical and everybody looks at it, is your proportion of your debt to your own capital, which is equity. And if you are making losses, it should never be more than 0.5. meaning your debt should be only half of your equity. Otherwise, you can't service it. But if you're profitable, you can go up to 2 or 3 times of that. So please, because remember, people always give you loan based on what you have, and your capital is what you have, and on top of that. So your leverage or debt and equity is very important, So always keep that in mind. Once you cross 3, meaning you are coming in a risky category and your loan is going to get very expensive. This is also one thing. What is the market size of your product? At what scale are you going to be? Do you have internal data MIS? Are you registered as an entity? Do you have a GSTN number? Do you have a bank account? And are you accessing most of your transaction through banks? What is your credit score? And what is your experience in this business? And what is your cash runway? Do you have a confirmed order book? So if you look at all these factors very closely, you will understand whether you're debt ready or not.
Along with points you mentioned, do they need to check in how much tenure they will be able to repay the loan?
Exactly. Yeah. So the reason for looking at cash flow from your business is what is the EMI you can afford, and whether your profit margins are enough to take care of the interest costs, what internally you're generating. And to switch the sides, how would a lender evaluate you? You have evaluated yourself. So usually, there are some rule of the thumbs. Every institution has their own way of evaluating and all that. But there are certain rules of thumbs. Like if your EMI cannot be more than 60% of your net cash flows, meaning what you are generating and what you are spending, the gap between that, whatever balance you have, your EMI should be less than 60% of that. That would help you understand how much of the debt I can borrow if I can afford only this EMI. And to put it another way, any lender will look at, okay, how much percentage of annual revenue can I give you as a debt? So usually it is 25 to 30%. Like when a bank is looking at your asset, it decides, okay, should I give you 80% of the value of the asset as loan or 50% of that value, depending on the underlying. Similarly, they will look at your cash revenues and decide how much percentage of that they can lend to you.
So lenders seek security for the loan. What if entrepreneurs does not have security? How to go ahead in the process?
Yes. So, very good question. Again, there is a spectrum. Having mortgage collateral, having some mortgage collateral, having no mortgage collateral. So you will attract different lenders because of that. So if you have mortgage collateral, then banks are the right place for you to go because they will give you the cheapest lending cost. They might take longer time, but they would give you the cheapest lending. If you have some, like, receivables and all that, then it would cost you between 15 to, let's say, 25%. But if you have no collateral and no security at all, unsecured loans can cost above 25. So that would depend, because collateral decides your risk. Everybody does a risk-based pricing, and every institution decides what is the level of risk I want to take, and then I price my product accordingly.
So now when entrepreneurs have prepared the checklist and done self-evaluation for debt raising, what all debt options are available for them? We know there are traditional debt options available like banks, etc. And nowadays non-traditional options and for debt are also available like fintech.
Correct. So, as you said, banks are a traditional way of going. There are certain NBFCs which are sort of traditional non-banking financial institutions that are there. Then there are such NBFC give you loan against loan or property, or they give you vehicle loans and things like that. So these are traditional. The non-traditional ones are different lending platforms that you see today. Like you have a lending card, you have Indifi, you have Kinara, you have Neo Growth, you have Pesa Bazaar, and then these are sort of formal. There are also informal, which most MSMEs know in their particular trades. Like you have trade associations, chit funds, money lenders, you have suppliers giving you advance, which you rotate, you get credit. So these are different ways in which different sources, and everything depends on your eligibility, because you are eligible for some sources and not eligible for others.
Are these relevant for startup also?
So I do not want to differentiate between MSME and startups, because startups are MSMEs which are less than 10 years old and they are registered with Startup India and all that. So, but the nature of business doesn't change. But usually we call only those companies as startups which we read in papers, who are funded and all that. But eventually they are MSMEs, because MSME definition comes from your revenue size, your capital base and all that, and that is standard across. So I think what uh, the sources that you can access, you should look at an analogy that if you look at our educational institutions, you have IITs in one hand and you have MET in another. IIT is a government college, not very expensive but very hard to get in. So that you can compare with banks, because banks have the cheapest funding source but hard to get, because you don't have mortgage collateral. They have a very stringent process and everything. But other lend, you have money lender who will give you money instantly but very expensive. They might charge you 2% a day or something. All MSMEs fall in between. So depending on, okay, what is your revenue? Do you have a good track record? Do you have good MIS? Do you have GST? Do you have bank statements? So wherever things are getting missing, the risk profile becomes high, and then your cost becomes high, right? So when you evaluate, and also amount that you need. So like all these platforms that I talked about, lending card and all that, you can easily get a loan up to 25 lakhs without much due diligence. So depending on amount that you need, what your own evaluation, you can access those. So if I talk about lending cards and such platforms like lending card, Neo Growth, Indifi, if you have your GST and bank statements, you can access loan. If you are related to an anchor, like you are a restaurant linked to Swiggy or Zomato, you can get funding from any of these new age funders, but you have to be digitally savvy for that.
Why to go to new age lender when bank would give the cheapest loan?
Yeah. So see, bank should be your first port of call if you can qualify. Okay, definitely. But the fact is that they do not meet your requirements most of the time. So if you need a very fast loan, just go to moneylender. They will not check paper, nothing. They will just take anything mortgage. If you want very quickly, just mortgage some gold with them. If you want to give, but if you don't have all this, you are a professional business, and depending on how soon you want a turnaround. So if you go to these platforms, you have GST, bank statement, all the identification paper, you are linked to an anchor, you can get a loan within a week.
If you don't have good credit score and non-compliant, then very expensive sources like money lenders would be there, right?
Chit funds and trade associations.
Would there be new age finance or fintech lenders who would be giving to these non-compliant borrowers?
But then they will be costly. You will have give them some alternate way of credit scoring. There will be very few lenders who will lend without GST and bank statements.
Or for small amount, you have to resort to personal loans.
Personal loan or something. Personal loan you can get on apps, even on a Flipkart site or anywhere. You can get but they are very expensive, and even on a credit card you can get a loan, right? Personal loan.
So how expensive?
It could be 1% per month or per day or something like that, Just look at your credit card. If you default, they charge, So these are unsecured loans. They are extremely risky. So your pricing reflects that.
How to get the latest information about the debt options? As you mentioned, should try to get all information from their websites or some agencies, or should call the call centers.
So there are sites like Paisa Bazaar and Lending Card, Neo Growth. They are easy to access. They are very easy in terms of, if you have all your documents handy, it should be fine. But it takes a bit of practice to be digital savvy. But if you're still not that digital, then your closest CA firm should be able to help you in terms of finding the right sources for you. And also, there are sites like Paisa Bazaar and others which give you many options to choose from. And also now there are new age lenders who focus only on retail segment. Like if I run a small grocery shop, then I can get an instant credit to buy from a wholesaler. And that can happen digitally. I can choose. Even those options are available.
Any forum, website, institution which consolidates such information?
Paisa Bazaar is such a site. All different lenders are there. You can just click and find out. And also, if you will remember, loan in 59 minutes is something that was launched by Prime Minister. There is a separate site. That is sort of an interface which gives you access to many lenders.
Okay, so Paisa Bazaar and Loan in 55-minute website can help in this process.
Yeah.
So how can an entrepreneur select the debt option from so many options available?
Yeah, I think it's a great question, Tripti. I think, many times we close our mind because anything finance looks very complicated. But, there are few things that we need to take care of. One, okay, what is the amount they are giving and whether it matches my needs or not? And then EMI options that I have, does it match my cash flows? Are they customizing or they are just giving a standard one? Do I get to choose which works best for me? Sometimes you will get that option, sometimes, but you have to compare again the thumb rule. Is that EMI less than 60% of my net cash flow every month? Then you look at the cost. Are they charging you a fixed interest or a floating interest? Fixed is they give you 15%. Floating will be if the market rate changes, the MCLR or the government's rate changes, then your rate will also go up and down along with that. That is one. Again, method of charging. Is it flat? Flat looks very simple because all the money lenders use it. 1% per month, 2% per month. But you have to look at the effective interest rate, not the nominal interest rate which is given. You should always go for a reducing balance. Again, don't look at only interest, look at are there any processing charges? What will be the effective rate? Are they asking for any cash collateral or not? Do you have that cash collateral? Then what is the security they are asking? So whenever you have security and cash collateral option and you have the ability to do, technically your interest charge should be lower than somebody who cannot give security or cash collateral. So these are the things, and look for all hidden charge. Again, what is the prepayment penalty? If you want to, let's say, repay faster, it is very counterintuitive. But if you pay before your time is up, you have to pay extra charges for that. What are the default charges? What would happen if you don't pay on time? Just compare all the options like that. How will they collect? Will they do a doorstep collection? Will it be a digital collection? What would be, look at all that and see what works for you.
So if you are properly compliant and have good financials, banks should be the first option. As NBFCs and fintech you should go to. Suppose if you're not compliant and financials are not good at all, overall credit score is very low, then you have to resort to money lenders or chit funds, etc. Got it. So apart from this, how to select lenders based on other criteria which you mentioned, example, ticket size, collateral requirement.
So again, banks can do small loan and large loan. They have complete flexibility. NBFCs is a very large bunch. They all can't be clubbed together. Some are asset financing NBFCs. They only do, like Shriram Transport will only give you asset financing. Then there are Mannapuram and Muthoot's who do all sorts, including gold loan to others, very large. So depending on the size of capital, an NBFC can decide what is the maximum loan they can give. So there are different categories. Like the company that I work for, 𝐋𝐨𝐚𝐧𝐬, Debt, we provide loans from 50 lakhs to 15 crores. But they have to be first generation professionally managed companies. So very high on compliance, but they don't have mortgage collateral to go to banks. So they come to us. And they may not be profitable also.
That's interesting. So in what range you would be charging?
Our costs range from 15% to 21%, depending on the sustainability of the business, profitable. So if you are not profitable, 40% of our companies are not profitable. So that's how.
You can give long-term 5-year loan also?
We can give from 12 months to 5 years.
So for an entrepreneur, what is good, long-term or short-term loan?
Again, purpose. Because long-term loan means you pay interest for a longer time. So there are different types of loan. One is term loan where you take a fixed, you take an amount which you pay over 3 years in EMI. Okay, so the benefit of that is that your EMI is very small. So if you can afford a smaller EMI, then you increase the tenure of the loan, but the interest is higher. Another is like a cash credit. Like I have a business cycle where my clients pays in 6 months. So I need money only till 6 months. As soon as my client pays me, I can pay back to the bank or any NBFCs. Only banks can do cash credit. NBFC do different kind of revolving limits. So then I pay interest only for 6 months. But after 6 months, I have to repay back the whole amount. So you can do a smaller bank overdraft limits with bank. They will give you limit of up to 1 crore. I can take it, I can give back, I can take it, but I pay interest on whatever I'm drawing.
Yeah, working capital loan.
Working capital. So I think longer duration loans reduce your EMI but increase your cost. So you have to keep this balancing act. What you can afford, what you can, reduce interest costs. If you want to reduce the interest cost, then you should pay it back earlier. Or you give bigger proportion back. You take up bigger installments to return.
So what is the ideal way to reach these lenders? Why I'm asking this question, Ragini? Because some of the MSME entrepreneurs are savvy, well networked, while all might not have right network and information to reach right lender.
Help, yeah. So no, you are absolutely right. See, always it is best to find it yourself. So either you do it digitally or you go to the branch offices, because every area has a bank branch, a small finance bank branch, an NBFC branch. You will see. You can walk into the branch, talk to the customer relation officer. They will direct you to whoever, And also, I think it's important to be aware of all the government schemes, because there may be many MSME schemes which the banks might be pushing. There could be for women entrepreneurs, there could be special schemes, some interest rate subvention that might be. So you should keep yourself updated, because then even if it is just walking into bank branch and finding your options, you may not qualify, but just walking in and finding out, okay, what can a small time trader like me or a business can get, so that you can work towards readiness towards it,
Very relevant point you have said. Walk down to the nearest bank branches to keep yourself updated, even if you don't qualify. Don't know when relevant scheme comes for you and you will qualify and get it.
Correct. And build relationship with the bank where you have an account. So then they can connect. Another important thing is look at institutions like SIDBI. This is Small Industries Development Bank of India. They have special scheme for MSME. They are made to serve MSME. So even walk into their branches close by. They may not be very visible like others, but look at Google Map and find SIDBI branch. Go find out.
SIDBI, etc. can be approached through helpline also if there is no nearest branches.
Look at their website. They give you both options. They give you a helpline sometimes, but always a personal connect in such old age institutions help, and they work two ways. They also support banks to help MSME, and they do it directly themselves, outreach program. So it's good to be aware. Spend some time in a month to look at all the schemes that may apply.
What are the other critical points which need attention while taking the loan at loan sanction letter or loan documentation stage?
Yeah, points to be careful about is read the loan agreement very closely. That what are the permissions you need from your lender for running your business, right? Usually lending doesn't allow them to appoint a board of director, except SIDBI, which appoints a board of person even if you take loan. But what is the MIS that they require? from you every month, every quarter? What are the declarations they need for you? What is the if you are saying that you are using this loan for a particular purpose, let's say, then are you using it for that purpose? What is the evidence? Will you be able to give the evidence for that? Many of them will ask for a personal guarantee. So please, they will ask for your net worth certificate, whether you have enough net worth, if it falls on you to personally pay the loan or not. Then anytime you take a new loan, you have to ask the previous lender. You have to see whether it is required or not, NOC. So you may not be able to negotiate all this because these are standard practices, but you have to make a note of this so that you do not ever miss on it. Otherwise, they can give you a loan recall notice. And if you're not able to pay at that time, your credit worthiness will be affected. So just be careful on what are the requirements you need to meet after. So like you have given a particular bank account from which they need to take out the money as an installment, because these days you don't go to a bank to give money to anybody, right? It is directly auto debited from your account. Ensure that you have the money. There is no point in having the money a day before and day after. It would still seem like a check bounce. And another thing to be careful about is that when a lender is evaluating you and they look at your bank statement and they see too many check bounces, it is a big check mark. It will affect your credit worthiness. So don't be careless about it. कि ठीक है ना, आज नहीं, I'll pay tomorrow. ऐसा नहीं. Every check bounce or every failure in collection is recorded. There's a digital record, and everything, it's like a red mark. It's like question paper mein cross, and these are like very critical aspects to look at.
One more thing, does all lenders ask for pledge of equity in case of the borrower is a company?
So again, it is every NBFC have their own credit policies and all that. So it's hard for me to say which NBFCs would require it and which won't. And usually share pledges are required in a company which has external funding, like you have a VC funding or an angel funding. Otherwise, share pledges don't have any meaning, right? Because for a private unlisted company, share pledges are important only if you have a reputed investor on your. But if you don't have any other, if you are loss making, you don't have any collateral to offer, then you may have to give share pledge. Correct. But share pledge is pretty common with the startup founders. And if you can make good of the payments, there is nothing to worry, because you can release the shares by paying the loan back.
Great, Ragini. You have shared a lot of points with our listeners which entrepreneurs need to be aware of before starting the journey of loan or debt. Right from self-evaluation to lender selection, and which critical points to be kept in mind to take care of credit scores, etc. So now moving towards the last section of the episode, we would like to get some guiding principles from long-term perspective for our listeners.
Let's take a quick break.
MSMEs and startups are looking for various kinds of support and upgrade. Are you a product service provider, expert, advisor, consultant, mentor for MSMEs and startups? Do reach out to MSME Talk to list your business. Check the link in the description.
Right. So I think the first guiding principle would be that best funding is from your customers, neither debt nor equity. So you are in good business if your customers are paying for the product, and because that is where all the funding is required to get the revenue, right? So that either advance or you have a recurring revenue from your customers, because they like your product, they pay for it, so that is your best least possible credit. And also your product is worthy of recurring revenues, so that is one thing, meaning it's so important in their lives that they want to pay and get it. That is one thing, that is the test of your business model, if you have a paying customer and willing to pay. Second is go after profitability rather than funding. Celebrate profitability. Look to build sustainable businesses. Funding will get used up. At some point you will have to answer the call and become profitable. So do that right in the beginning. have a clear roadmap to profitability, not in first year, not in second, but whenever, you can't endlessly remain not profitable. The third important guiding principle, and I think it will help you transition from informal to formal, is transparency. Be very transparent about sharing information, recording it carefully, maintaining your books and accounts, compliances. So, in a large bucket of governance, have a great governance around everything, because keep your business and you separate when it comes to taking things from business. But it is the same when you are giving things to the business. And start small. Governance begins from start, because that is your value system which takes you forward. Otherwise, you will remain small.
So focus on getting capital from clients instead of internal equity or raising debt is a critical point. Apart from that, you said that focus on profitability and high standard of governance and transparency to be maintained always. How about some hacks from short-term perspective which can help in day-to-day processes?
So I think very quick hack is, like I talked about, discipline of your cash, no check bounces, absolutely. For that, I think important to set reminders. Are your customers paying on time? Are you complying with the compliances, GST, income tax, ESI, PF? Set reminders for yourself. Third is, are you paying suppliers on time? Anybody? So even if you do it in 3 times in a day, keep an eye, don't lose it. Lose focus on any of these.
So reminders can be set to put discipline in place to check on your customer payments or your payment to suppliers or bank EMIs, compliances, your GST or ESI to check from your employees or respective team so that you don't miss on the important deadlines while focusing on the business.
Correct. And I think you have to transcend past, present, and future as an entrepreneur. Don't forget what you have learned in the past from your experience. Which customer did not pay? Which article of CA firm missed the deadline? Which supplier you missed paying? Don't forget that. And what happened because of that, right? So that will keep you on track. Present, of course, keeping track like reminder. And future is, look ahead. Is my order book enough to take me through the next 6 months, or should I start the business development now for the next 3 months? Do I need fund now or in next 3 months? Then I should start raising now. You can't dig the well when you are thirsty. Yeah.
Thanks a lot, Ragini, for coming on MSME Talk and guiding our listeners. Thank you so much, and we wish you all the best.
Same here, Tripti. Thank you, and thanks. You're doing a great job for MSMEs. I hope they find value in, the efforts that you are taking. Yeah. All the best.
Through this episode, I hope you would have got some answers to your queries and guidance for way forward. Do share your learnings from the episode, your feedbacks and suggestions. If you are an entrepreneur and have questions from experts or any particular topic or profile of expert you want to hear, or if you are an industry expert with MSME as a target audience, do reach out to us. Our link is given in the description. And at last, please do subscribe for MSME Talk podcast, and don't forget to share the podcast link with your friends, family, and network. Take care. Goodbye. Happy to share MSME Talk podcast enters peak ranking chart of 10th country in the Apple Podcast country level entrepreneurship category. If we are an expert or provide product or services to small businesses, MSMEs and startups, reach out to us to discuss showcase opportunity in MSME Talk. Contact details given in description.